everybody, it's Christian from Serene Education with the 4 major news update for the 26th of February 2013. Hi guys, just apologies for the sound, I've got a bit of a cold. Nonetheless, I'll do my best to give you the news this morning, and I'll be doing the 4 majors as per usual. Let's start with the euro against US dollar. We've had a lot of movement, and it'll be quite interesting to see what we have stacked up today because of that. Yesterday, you probably followed the news. If anything, you know that we had the Italian parliamentary elections yesterday, and we had a tie. Apparently, after all the votes were tallied up, there was a tie. Not really good for things. Berlusconi's rerunning for election apparently, and apparently, it's hung parliament, which is not good for for Italy as well as the eurozone, because they can't make up their minds. So we saw a lot of negativity in that news announcement late yesterday afternoon, once all the votes had been tallied up. And sure enough, you can see on our daily candle, price really falling after price actually made a really good move yesterday morning to the upside, and reattempting this prior consolidation support and resistance here just above the 13,300 mark. However, the closer we got to the end of day, when all those votes were tallied up, the news actually swung totally in the opposite direction, and we end up with this bearish engulfing candle. Price really moving lower with a lot of momentum and heading towards this other psychological support and resistance here, previously roughly just above the 1305 mark. And this after an indecision, a very, very indecisive candle on the Friday. So you can see now we've pretty much closed lower than this major swing high, depicts upside movement, and you can quite clearly see we've had a failure here near term at 13,700, and since then price has actually moved towards this current support and resistance level pullback. This is looking at the low to the current high. You can see that the 13,300 was a 23.6 pullback area, bearish engulfing candle break lower, and price actually started to move to the downside because of that, and headed towards this 38.2 fib area, which we reached quite briskly yesterday afternoon. However, this morning on the Asian session, you can see the momentum still driving lower, very tentatively, but as long as it stays below or trades lower than the 38.2 now on our daily, so anything below 1310 or 13100, we should look for price to find resistance here at this level, and intraday start looking towards that 12,900, which is the major support and resistance level going forward in that time frame, which will also bring us back towards that institution moving average. So on our 4-hour time frames, there's those areas there I mentioned. We had a bit of a consolidation here, a huge move to the upside yesterday morning. However, bearish engulfing candle after the news came out about the hung parliament results in Italy, and price fell quite drastically late yesterday afternoon, going into the evening session, into this consolidated support resistance here at the 1305, which is our 38.2 area. So as it needs to remain below 1305 at the moment to still look bullish. Bearish long term. And you can see on my hourly chart, I've put on these areas, I've plotted these areas. Here's my major 23.6, 1300, where the institution is as my price support and resistance. Near term, you can see the indecision as we head into this institution, and then you can see the bearish engulfing candle to the downside, tackling the price support here quite nicely, bouncing, and then that sentiment carrying through to 1305, which is my 38.2 fib on my weekly and daily. So it needs to remain below 1305 now, long term, to see further extensions towards the 50%, the 61.78, and all the way back down to 100 if that's negativity. So as it stands at the moment now, intraday, my 1305 needs to remain as resistance to see any further selling sentiment for the foreseeable future. Okay, moving on to the sterling against US dollar. Let's have a look at this particular pair. What I've noticed, you'll notice on the weekly here, recently, last week's candle, very, very bearish engulfing, trading below this major support and resistance level here in the shape of the 15,300 mark. But I wanted to see how far this was actually going to move. So what I did was I took a fib projection from the high that we saw here, this exhaustion candle, all the way to this consolidation support here over a 2-week period at this area here at 15,700. And you can see the pullback, and you can see the fib projection. And ideally what happens is price needs to move 100% of the initial move. So from here to here, that move to the downside will copy that. And sure enough, you can see where price is trading now. Yes, we're below the major support and resistance level, but with any major breakout, you're always going to find some sort of pullback. And sure enough, we are witnessing a pullback as we speak. So what it can happen is we could use the 78.6 as a guide stick here at the 15200, as price needs to stay below. But as long as it maintains below 15300 long term, it's still looking negative nonetheless. You can see on my daily chart here how very negative it has been since the early part of January. As you can see quite clearly, and prices very quickly move to the downside. Lower swings depicts downside movement, guys. A downtrend is lower highs. Swing low, swing low, swing low, swing low, swing low, and all the moving averages in order above price. So not really looking all that great for sterling recently, and because of all the negative things about contraction, etc., as well as those talks that we're going to go into a triple dip recession are quite obviously to see. And as long as we trade below 15300, ultimately what we're going to see is a consolidation before we see a bearish engulfing, before we see price moving any further. So to be looking positive long term, we need to get above 15300. As long as we trade below 15300, then we should be looking for negative sentiment. Intraday, you can see that pullback in play on my 4-hour candle. There's my 15300. 1505, which is my 100% fib projection level on my weekly, is below me, so I know where that major support or consolidation is. And you can see price, people are pushing price to that and now taking profits. So be patient. At the moment, our price is pulling it back against the major trend, which is negative. Just got to be patient for this particular pair. Look for a nice bearish engulfing candle. So we either want to see a bullish engulfing close above 15300, or you want to see a nice bearish engulfing candle close lower to tell us sentiment is still looking negative. And then we should be looking for a break of 15 or trade into 1505 near term, and then look to see if we can actually trade even further to the downside. We do need to go to our weekly chart to give us an idea of where price is likely to go to, because this constitutes, you can see since 2010, price has actually found a support at 15300. So psychologically, excuse me, not a very good sign. And as long as we maintain below 15300, ultimately we should be looking here at long-term targets at 8500, and then down towards the 4500 and 1442. So there's a lot of air movement between where we are now to these areas, guys. So please be aware of that. Take it on board, factor it into your trading. So just be patient. Patience is key now. You can see euro and all its counterparts are actually falling quite drastically, and sterling has actually been climbing. So this one's doing the total opposite of what is happening with the other pairs. So she's on her own little mission at the moment now, but you can quite clearly see she's trading below 15300. As long as she maintains below 15300, we should be looking for negative sentiment. The only time we start looking for positiveness is when she's trading above the 15300 and above the institution. You can see the institution above price as we've been in this negative trend, so we should be looking for negativity. Moving on to the US dollar Swiss franc, let's have a look at this particular pair. Price still looking negative, still trading below major support and resistance lines. You can see these red horizontal lines are my monthly targets, the monthly support and resistance lines. And you can see what I've done is I've taken the weekly low here that we had in August of 2011, and I've plotted it, 11, up to the current high that we've seen recently in 2012. And you can see the 23.6 fib retracement area is also on par with my monthly support and resistance lines here between the 94 and 9300 mark. So clear resistance here. You can see price has been very consolidative near term, and as long as it maintains below these areas here, then ultimately sentiment is going to look negative. So a lot of resistance, highs not getting any higher, swing low, swing low, swing low, swing low. Price is moving up into a swing low area here, but it's still capped between the 93 and the 9400 mark. So no trade zone for this particular pair. I want to see a bearish engulfing candle, and then I should be looking to target my daily and intraday, look towards trade either back towards this near-term support here at 9100, but ultimately long-term looking towards that 38.2 here, which is in the shape of the 8850 mark. Get below that, then towards the 50 here, which is just short of 80, just above the 85.5, then 61.8 here at 82, and then you could go for a 76 mark, which would take us back to roughly around these areas here at 76 before we move down to 100%. So intraday or daily, I want to be able to see these areas. So you can quite clearly see the 94, 93. This becomes a no trade zone, primarily because there's just so much skittishness in this area here. There's a lot of hesitation. Price has been very hesitant in this area, and because of that, it forms a lot of resistance. And you don't want to be trading resistance. You don't want to be trading speculative anyway. So ideally get above this area on the daily above 94.50. Then we're trading into clean air to the upside, get below the 92.50 mark, and then we're trading clean air towards those price support and resistance lines here, roughly around the 91.10 mark, which is a nice little move to the downside. Get below that, then we should be heading towards that 8800 long term. Last pair of the day is US dollar Japanese yen. This particular pair, you can quite clearly see on our daily, has come into a lot of resistance here at 9400, which happens to be a Feb retracement from our weekly and monthly highs. You can see I've taken the high here on my monthly charts, and you can see back in 2007 to the current low we had through 2011 and 2012. You can see the 23.6 Feb retracement area was a nice price support and resistance level. So price was heading into that at 87, broke above 87, would actually head up towards the 38.2, which is in the shape of the 9400, 9500 mark, and that is where we are now on the daily, the 38.2. You can see the 9400 here, 95, a lot of resistance. Bearish engulfing candle yesterday after all the news we saw out on the European session with the hung parliament in Italy. Very negative news. Bearish engulfing all the last 2 weeks with of sideways motion. Not a really good candle. This morning in the Asian session, you can see price actually pulled back to the upside, to the underside of 93, which is a consolidation support intraday. However, failing to actually find any support above it, and now price is moving to the downside again. Trading very, very indecisive, very small range. So my 4 hour, I want to see where price is trading relative to everything. You can see the institution moving average now is in that area. 93 is that consolidation support and resistance I mentioned about, and you can quite clearly see near term we are testing some lows here, but also the institution here just above the 9200 mark. So as it stands now, as long as it maintains below 9200, then we should be seeing for price to actually still look for negativity, and then in doing so we should be targeting the 90, which happens to be the daily and weekly major support and resistance level. So bearish engulfing the last couple of hours. You can see just near term the last 4 hours price heading back up again, hence the reason why on our daily we have that indecisive candle, because we've been higher and now we've moved lower and then we're moving high again. So we have this spinning top formation, a lot more price action in the middle with a lot of wick on either side. So as it stands now, wait for a bearish engulfing candle on the 4 hour to confirm negativity, still looking negative to the downside. Once we've done that, then we should be targeting the 90 long term, get below that, heading towards the 88, etc. to the downside, to that major support and resistance level at the 87 mark, which is our 23.6 fib on our monthly chart. That's it, guys. I hope you have a fantastic trading day. Please follow any news announcements out there. Fundamental news is very, very important. Merv King is talking this morning for the Bank of England, so it'll be interesting to see what he has to say. We have inflation report hearings for sterling, red eye sales. This afternoon we have Bernanke testifying. We have consumer confidence index, new home sales, which is very, very important. Later this evening we have trades balance figures for New Zealand and the retail sales year-on-year figures for the Japanese market. So there's a lot of news out today, spread over a lot of currencies. Please factor it into your trading. Most important, if you are using this particular template, so please follow the rules of the template and back it up with sound money management. You can have the best template in the world, best strategy in the world, but if you don't back it up with sound money management, you have absolutely nothing. So please factor it into your trading. Otherwise, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.